This video is going to help anyone who wants to be a day trader in 2025. I will reveal the essential information about the most frequently traded markets so you will know where to start. And why is it important? Because trading is a survival game, and knowing this information can boost your survival chance, especially in the first few years of your trading career. Alright, let's jump into it. I want to talk about Forex first. I think Forex is a great place to day trade and grow wealth. And the reason is being that it is more scheduled and organized compared to the other markets. Since it has a news schedule which you can adjust your trading scenarios and trading hours based on. Another reason is stability. The currencies are regulated by powerful governments, and although we might see some crazy swings from time to time, the majority of the time the fluctuations are limited and predictable. So, based on what we discussed, Forex could be the number one option for junior traders. The second market is cryptocurrencies. Now, I do not personally prefer cryptos for day trading, and the reason is that unlike the Forex market, it can have unbounded daily fluctuations. You can easily experience a 50%, 60%, or even 90% pumps and dumps in just a single day. Instead, I use cryptocurrencies for my long-term investments. I take 15 to 20% of my whole portfolio and buy some undervalued crypto projects that I analyze to have high returns in the next few months or years ahead. I also use cryptocurrencies as a substitute for my transactions and purchases from online stores instead of paying with my cold cash or credit card. Our next option is trading stocks. When it comes to stocks, I prefer to trade stock indices like Nasdaq and S&P 500 instead of trading a single stock. And it's because stock indices are more influenced by the overall economic conditions rather than a single stock's performance over the course of 1 year. So it's kind of less time consuming and easier for me to measure the overall growth of the economy instead of spending a lot of time on just one company. And a quick note here, I'm saying that I'm more focused on the big picture of the economy. This doesn't mean that I don't care about the large cap stocks. So, because their news also can have a great impact on the overall movement of the indices. One good example is Nvidia's quarter earnings, which had a huge influence on the Nasdaq index in 2024. And one tip for those who want to day trade stocks. If you're a beginner, you might see some penny stocks go to the moon with some crazy returns in a very short period of time. And you might see some large cap stocks with less crazy movements and limited swings. Then you say to yourself that I want to trade a highly volatile market because it's more fun and exciting, and trading a large cap stock is boring and all. And I totally agree with you on that. But you need to begin with a more reasonable market with less crazy swings to sort of figure out your desired trading strategy or risk percentage and reward to risk ratio and all that. And then you will be gradually able to switch from trading large cap stocks to small caps or even penny stocks. Okay, moving on to the next market, which is gold. Gold has a bold difference from the other assets. It has intrinsic value, and traders go short or long on gold against a currency, which is usually the US dollar. And as we all know, fiat currencies like the dollar has no intrinsic value for themselves. So we kind of expect gold to outperform a currency in the long run. However, as short-time traders, we need to take this to account and we need to be aware of the market's bullish bias on the gold against the currency. Then we need to put less risk on our sell positions and put more risk on our buy positions. I think gold is a great asset for day trading because of its high PIF value and strong movements. However, it might not be the best option for the traders that are a little bit skeptical about their decisions and want to take a more cautious approach for their trading strategies because the gold's fast-paced movements can lead them not to decide rationally and lose a ton of money on this asset. The last market I want to examine is crude oil. Now, I do not recommend trading oil to beginner traders for a number of reasons. And to be honest with you, I have not been very successful trading this asset either. The first and main reason is that too many factors affect its price, like crude oil inventories, OPEC policies, geopolitical tensions, and seasonal demand changes. The second reason is that the technical behavior of the oil chart is very different from the other assets like forex pairs and gold. For example, the oil versus the US dollar chart does not respect the support and resistance levels like the euro against the US dollar pair does, which can be very confusing at the start. Or the chart can move very slowly from time to time compared to very fast moving charts like gold. That can be very boring for scalpers and impatient traders. At the end of the day, the answer to what is the best market for day trading can vary from one person to another. But I hope I could help you out to see things more clearly. And did I miss anything on one of those markets that I mentioned? Please let me know in the comments down below. And as always, thanks for watching this video and giving me your attention for a few minutes. And I'll see you in the next one. Peace.